Joining us on the show is Seth Freeman. He's Chief Executive Officer at EM Capital Management. Seth, it's good to have you on the show always.
Thank you.
Does the snap pool notification come as a surprise?
Well, it apparently came to the surprise of many parliamentarians, but it seems to be, in my mind, a brilliant idea in terms of their goal of what they're calling about having a larger majority going into Brexit negotiations.
Right. Seth, the pound strengthened. I mean, is this any indication of what is to come ahead of us post the election? Because possibly what analysts seem to suggest is that this will only be a reaffirmation of the current regime's strength, and it will only reinforce it after these elections happen. So will it only strengthen terms of trade for the United Kingdom, and is the pound likely to go further higher from these levels, or is it likely to be within a ballpark range of, say, 1.25 to 1.28?
Well, I think, the elections are not until June, so a lot of things can happen between now and then, number one. But surely, if the elections go smoothly and the majority and the people, British people speak and the majority is enlarged going into Brexit, that should reduce some of the uncertainty, particularly about the direction of the British economy in light of Brexit and EU, just the whole negotiating position stronger with the EU counterparties.
Right. Seth, what's your view on capital flows, especially for the frontline economies? I mean, we are looking at Germany and even the French election, which is coming up. Germany possibly in August, September. The French election will be, of course, in a few days from now. And then there's the UK election here. So in this environment of a little uncertainty over the next, say, 2 or 3 quarters, where do capital flows get positioned, and where does the churn happen? And between whom does the churn happen? And I mean, does Germany become a default choice in terms of equities as well as the security of the German bond? Do funds flow into the Swiss franc from here on in the very near term?
Well, we know that the Swiss have an abundance of cash, so I don't know how much more can be absorbed in that system, or whether investors and savers are willing to actually pay for savings. I think we really need to decouple the UK from what's going on domestically in France and sentiment in Italy even. Italy's economy is still very has a lot of problems, big overhang still in the banking system with very slow growth. So I guess Germany may be the recipient of flows. I actually think that what might happen is we're going to see more flows coming to the U.S., particularly if Trump is at all successful with some of his spending programs, particularly infrastructure.
Right. It's interesting you speak about the U.S., Seth, because, I mean, we've seen the kind of valuations that do not seem to stop, the up move in valuations for the Dows and the S&Ps of the world. But in terms of the fiscal management, Seth, isn't there a concern? Because while he's speaking about a slash in personal tax rates, corporate tax rates, the border adjustment tax is, kind of uncertain right now. Where does the financing of this infra spending plan come from? So inevitably, there will be a postponement of the debt ceiling as usual, or as some quarters are suggesting, there could be a default. But obviously, that might be too exaggerated to claim. But yeah. What's your view on the fisc?
Well, it's very complicated. I don't know that this border tax really has legs, frankly, not to make a pun. But it's so complex in terms of what's being talked about to finance these various programs. Plus, we do have a situation where we have relatively higher employment. And, one of the goals of infrastructure projects is typically to increase employment. So it might actually create a greater wage inflation. The one area that's been discussed that I think will have a lot of pushback as a way to pay some more money into the government is to eliminate the deductibility of state taxes. For example, our taxes here in California are very high. And one thing that helps buffer that is we can deduct the taxes paid in California against our gross income. So in a sense, the entire country is helping subsidize taxpayers in high state tax locations. This is a very popular benefit, and that's one of them that will be very politically difficult to roll away. So it may not be until the end of the year, frankly, that we see the kind of fiscal changes that the Trump administration has been talking about.
Right. Seth, what's your view on U.S. fixed income? Because constantly we've been seeing yields falling. So there's a rush to the 2-year, the 5-year, and even the 10-year. Does that continue even from these levels? And if you can also throw in a view on emerging markets and where does India stand in the context of these global capital flows?
Well, if the Fed does what they've indicated, which is 2 more 25 basis point increases, that should not have any kind of rocking effect and will be priced in. What the Fed does with its trillions of dollars of portfolio investments and how they liquidate those, and whether they liquidate treasuries or mortgage bonds, I think that will have greater impact. It's problematic when we have relatively low consumption growth and still have inflation. However, it's kind of odd that interest rates go up, and the Fed raises interest rates and 10-year treasuries go down. So I think that indicates the overall, I wouldn't say weakness in the economy, but a lack of robust growth.
Right. Your view on India and China in specific, Seth, because bilateral trade imbalances have a bigger role to play as far as currency moves here are concerned. While we've seen the yuan being consciously devalued, but in terms of the Indian rupee and the extraordinary strength that we've seen there is really against the rub of the green. If you take a look at other emerging market currencies, of course, there's the Korean won and there's the Taiwanese dollar as well. But what's your view on the Indian rupee in specific, fund flows to India?
Well, over the next 12 months, the rupee is expected to be more resilient than most of the other Asian currencies. Wells Fargo was reporting earlier today, they're looking at about a 1.5% weakness over the next 12 months. And that really reflects higher U.S. interest rates. But compared to other economies, that's a relatively mild impact. And it does play off the fact that at the moment, the Indian economy and the RBI is actually doing a very good job. So in terms of flows, I actually think India should do well. I would expect flows out of Indian debt, but more flows, continuing stable flows into equities.
All right, Seth, we're going to leave it at that. Thank you so much for giving us your view on what you feel about the UK snap elections, the political landscape in Europe, what you feel about US.